What's up, guys? It's Rob here, and today we've got to talk about what's going on in the markets because things aren't looking great. If you look at the chart, you'll see what I'm talking about. We have been moving down, unfortunately, ever since the after hours of yesterday when we hit highs of 409. We just hit the $400 level moments ago. Literally, less than a minute ago, we were hitting up at the $400 level on the SPY. And there are a couple of reasons for this, right? There are some fears that people are having about the markets over the course of today that are driving us down. Now, whether they'll continue to do so is a different matter, but we did hear yesterday Powell speak, and you can actually see that people received it fairly well. Initially, we were dropping when he spoke. We started moving up and made highs in the after hours, but there is a new threat that people are now talking about. They're talking about it a lot more seriously, and that is actually food shortages, okay? Unfortunately, a lot of countries are dealing with food shortages to one extent or another due to the situation in Russia and Ukraine, okay? Ukraine and Russia are responsible for about 29% of the world's wheat exports, and thus India has decided to ban wheat exports because of all the conflict going on there and the decrease in supply of wheat to the world economy. Okay, so India has banned wheat exports, and the United States and Europe are trying to improve their supply chains. Now, in terms of if we have to worry about this as people living in the United States, not too much, right? We have a chart right here that actually shows how much food we import. And you can see it's about 166.9 billion, so 167 billion essentially dollars worth of food in 2021. Now, fortunately, we actually export in 2021. We exported 177 billion, so we exported overall more food than we imported. Now, this won't be great for variety if supply chains really do start to stall out. That certainly wouldn't be great for the variety of food that we can get, and it definitely wouldn't be good for the economy. But in terms of actually having enough calories to sustain ourselves, if you're living in the US, you probably know that's not going to be too much of a problem, right? There's already a lot of people who are eating more than they need to be, and we really don't have to worry about running out of food here, right? In terms of the economy, though, it's certainly not a good thing to see that countries are starting to cut off some supplies, right? India, at least, with wheat, and understandably so. India has a massive population that's not necessarily the best fed, so it makes sense that they're trying to keep some more of their wheat for themselves, right? That makes sense for them. Now, that's not the only threat that we're dealing with right now, okay? Companies are warning of rising costs. I mean, what else do you expect, right? We have seen big inflation over the past year. Obviously, companies are dealing with these rising costs. The two biggest complaints that they're talking about, though, are actually fuel prices rising and labor costs. So it makes a lot of sense, right? Ukraine and Russia are also responsible for the rising fuel costs due to all the sanctions being placed on Russia and the massive amount of exports that they used to have in those areas. And unfortunately, labor costs are also having to go up, right? We're seeing that there is big inflation. People need more money just to survive day to day. Over the past year, prices have gone up quite dramatically. This doesn't even capture the full extent of it, in my opinion, right? I think inflation is probably has increased much higher than 8.5% in terms of what people need to survive, in terms of housing and all kinds of things. But people are demanding at the end of the day higher wages for their work, right? They're demanding more money for their labor, and it makes sense. Now, overall, when we're looking at the market, one thing that we're noticing today is that the overall market, right, the S&P is falling more. It's down about 2% than smaller market cap stocks or the Russells, right? The Russells is down about 1.25%, so not quite as bad as the S&P. If you look at this market map, you can see what I'm talking about. You can see these larger market cap stocks are pretty much mostly red, right? There's a couple of flecks of green, but if you look at more small market cap stocks included in that, you can see many more green areas, which once again is what we want to see towards the end of the market in a downturn, right? You want to see the riskier type stocks coming back a little bit before the larger market cap, safer stocks. They're probably going to continue to fall for a longer period of time than the smaller market cap ones. It's not a guarantee that we're at the end of this thing. Obviously things aren't looking great in the S&P today, especially the fact that we're hitting up 400. If we do break below that, then we could certainly move lower, right? That wouldn't be a good thing. The fact that we're hitting up this support level right here, hopefully it will hold, right? There's no guarantee. That's the hope. Now, Jerome Powell did say some things yesterday, and mostly he said what we expected, right? He basically just said that the Fed will not hesitate to keep raising rates until inflation comes down. He's harping on about that. Obviously, there is some big inflation out there, and Powell doesn't want that to be a big problem for the economy, so he is going to continue hammering at inflation, trying to get it lower, because he knows it's a big problem at the end of the day, and it will be a good thing to get inflation under control, right? Nobody wants to see these rising costs. Everyone wants costs to decrease, right? And that will be a good thing for the economy at the end of the day, right? It'll take a while for us to get there, probably, but if we can get inflation under control, that's going to be a good thing. He is saying, though, that, he's not taking as dovish of a stance as people might have been hoping that he would be, considering the fact that inflation was actually falling month or annually, I suppose, month over month at least, in the last CPI reading. Now, we are looking at the price of oil real quick just to end this off. The price of oil, fortunately, did actually move down since the last video, down from 115 to 112.90. So if that's a trend we can continue to see, that would certainly be good. It's not a guarantee. And obviously, guys, none of this is financial advice. This is just a quick update letting you guys know what's going on in the market for the day and hoping that you all have a great rest of your day. And I'll see you in the next one.